We live to see another day. The market crash has stayed away. Let me know how you guys did on your portfolio for the day. Did you finish in the green? The market has been extremely volatile lately, and it's been pretty unpredictable where it's going to be headed. There's tons of different talk out there in the economy, whether it's the war that is on the brink of happening, and it just is going to affect the market in different ways, and you never really know just what it's going to do. And right when you expect it to do poorly, your portfolio could end up green like mine did today. So in this video here today, I'm going to be talking a little bit about panic selling and try and talk you off the ledge a little bit if you are on the brink of doing so. If you guys are new here to the channel and you don't really know what it's all about, I talk about all things investing with my tips, tricks, and insight into the stock market. So if that's something that interests you and you're looking to increase the size of your portfolio, then make sure you quickly jump down, hit that subscribe button, and turn on the bell notification so you can be alerted when new content comes out. I post a ton of different content that you're definitely not going to want to miss. Now, one of the main things that I do here on this channel is something called the Robinhood challenge, where I take $100 each week and incrementally invest that into the stock market. I try to grow my portfolio as big as I possibly can. And in doing that, I'm investing in very solid dividend companies that are going to be stable for the long term. And I don't really have to think much about my investments because when I identify them, they're companies that I want to be investing in for the rest of my life. Now, what that does is allow my investing to be more passive and make it so I don't have to worry about every single move that I do make. So what I do is hop right into the Robinhood app. You should be seeing it on your screen right now. And I'll just cover what's been going on lately. So you can see the past day, you can see the stock market opened up pretty low. I was down a pretty decent amount for an opening. I went down as far as almost 0.5% there. And we bounced pretty quickly there in the morning, and I ended up finishing up positive in the green, just $3.67. So for the past week, we're up $7.77. Not too great, but it's not bad. Obviously, you don't want to be in the red, so any type of green return is going to be solid for this. Over the past month, we are up 1.07% or $35, and over the past 3 months, we're looking at $152.31. Now, the duration of the Robinhood challenge, we're up over $220 now. Over around 8% of my portfolio is what I'm looking at for returns, so that's not too bad. And then in this, we look at the dividend payments that I am receiving. So if I head over to that section and sort it by dividends, you can see everything that I have rolling in here. Now, these are basically just companies that are paying me their dividend, and what I do with the dividend payment is reinvest that back into similar companies so I can kind of re-up my position, and I don't really have to worry about those investments because it's somewhat automatic. These are companies that I really want to be invested in, like I said. So let me go over my moves for the day on the stock market. And the first one I want to talk about here is one that I've been investing in for a little bit of time now, which is Monmouth Real Estate. Now, I talked exactly about why I was investing in this company in a video right here that I'm going to link in the description above and the card below. So for this company, basically what you want to know is they have an extremely high occupancy rate. They're a REIT, a real estate investment trust, and they also have their buildings, their properties are on average younger than 10 years, which is really solid because you don't have to worry about like repairs and huge expenses that comes with just owning the properties over a long period of time with the wear and tear of the companies or the businesses that are renting them out. Now, some of their customers, some of the people who are renting their properties are companies like FedEx, they have Best Buy, they have various different well-known corporations that are renting out their facilities, and they have longer term leases, so it's going to be a company that's around for a while. If you look at what's been going on with this stock, I invested a little bit ago. So if you look at their 1 month trend here, they are down nearly 6%, 5.9, they're down 90 cents, which is a little bit of money, but that's a pretty significant percentage to drop down over 1 month, 5%. So what I wanted to do was just emphasize, I'm not going to panic sell the shares that I have. I'm going to actually double down because this is a company that I truly believe in. If you look at their charts, they've been at high, they're not even at all-time highs, or they weren't even that close to it. They've traded as high as a little bit over $18. And I think we could get back to that price point. They always seem to beat earnings. They're paying their dividends. They're doing well. Their company's established. I looked into their financials and everything, and they're just one that I believe in. So over the past month, like I said, they are down quite significantly, and I wanted to just dollar cost average my way in, and I went ahead and I bought 4 more shares today. So that's exactly what I did with that company. You can see my average cost is $14.94, total equity $172.20. So this is pretty solid. They have a relatively high dividend yield there, which is approaching 5%, which is pretty good. Now, one thing that I want you guys to keep in mind when you're investing in companies is you're gonna have some good periods of time and you're gonna have some bad periods of time. All stocks kind of fluctuate. They go up, they go down. And usually if you have pretty big jumps in the price of the stock, it's usually going to have some type of retraction where it's trying to stabilize. So just keep your eye out for things like that and don't freak out when this happens. Let me go into a specific example for you to just emphasize exactly what I'm talking about. I'm gonna hop right onto the computer so you can see exactly what's going on. So I'm sure that many of you that are watching this video right now are familiar with the company Best Buy. What I want to talk about is a little history about Best Buy. So when you think back a couple years, back in 2009, Amazon was a very dominant player. They were just rising and they were knocking companies out left and right. So these were companies like Circuit City, which was liquidated in 2009. There was Nobody Beats the Wiz, which was permanently closed since 2003. This is all directly because of companies like Amazon that were coming in and just squeezing out the market. So what happened was Best Buy went from a high of $58.32 per share back in May of 2006, and then its stock ended up going down as low as $11.29 in December of 2012. So you might be thinking, Best Buy is on the brink of going out of business here. But you're entirely wrong. What ended up happening was even earlier in 2012, the company had posted $1.7 billion in quarterly loss, and it experienced a 0% growth in revenue over the previous year. What happened was Best Buy powered on by closing down the stores that were not performing well, and they reorganized the shopping experience at their locations, basically streamlining its supply chain, and the renewed efforts positively impact the stock price, which was trading around $35 for a while. But if you take a look at the price today, it's currently trading around all-time highs of $87.91. So obviously a company like this, if you were able to hold back your fears of selling out, you were gonna make so much more money had you kept investing when it started to dip. So that's exactly what I like to do in my portfolio. You see me buying more, even though it's just a 5-6% swing there. I believe that the company will eventually bounce back. And if it goes lower, that's even better for me because I can just keep getting in at a lower price point where the company may then bounce back in the future. Now, obviously, you're gonna wanna do your own research into companies. Don't just blindly copy exactly what I'm doing. Don't sue me because I'm not a financial advisor in any means. This is merely for educational entertainment purposes here. So my second move on the day is one that I've wanted to do for a while. I picked up another share of AT&T. AT&T, obviously a very solid company. They're a very solid stock for my portfolio. If you look at them, I've returned $22, not including the dividends. Robinhood doesn't calculate that for whatever reason. Kind of frustrating, but not too worried about it. I'm gonna soon create an Excel spreadsheet to track all of that stuff so I can be fully transparent and everybody can see exactly how much I've made from every single stock. But I ended up buying another share today. My average cost is around $35.46. Why I did this, analysts have been checking out this stock and the price that they're targeting is around the $42 to $45 range. And I believe that there's a lot of upside potential in the upcoming year for AT&T. And I wanted to just continue to get into a company like that. Now, I just wanted to make a quick announcement pertaining to the Robinhood challenge here. What we're gonna actually do is start shifting the times that we post the videos. We're actually gonna post the Robinhood challenge videos on Wednesdays now because what I was previously doing was basically forcing myself to buy into these companies on Monday, not really letting it play out. And it'll basically just give me more time to curate the content and provide it for you in a better fashion. So instead of focusing on every single Monday, we're gonna be focusing on releasing a new video for the Robinhood challenge every single Wednesday. And that's gonna start up next week. If you guys did enjoy this content, then make sure you jump down, hit that like button. It really does help with that YouTube algorithm. It helps me as a content creator, and there's a ton of videos on my channel pertaining to Robinhood investing, and one of my favorite ones right now is the one where I showcase the debit card that I received from Robinhood, the cash management account. So if you guys don't have access to that yet and you want to know what it's all about, then why don't you go ahead and click the video that's going to be on the screen right now. And thank you for watching this video, guys, today. Have a great day.